Good afternoon. This is Keith Brown with Commodity Consulting with some commentary for the markets on Monday. It's September the 14th. It's about 3:30 Eastern Time. Markets are still reeling from those supply and demand numbers that came out last week. For cotton, they actually raised the U.S. crop, but not as dramatic as people had thought. There was a lot of talk the market would come out at 13.8 million bales. It came out around 13.4. Above what last month was, but still well below what the trade was looking for. So that indeed rallied the cotton market. We went up to 6,400. And of course, in the same breath, the world numbers came out, and we did see an increase in global carryout, up well over a million bales. So that sort of snuffed out cotton's candle. And by the end of the day, we actually only closed about a dozen points higher than where we started. Today, we actually finished lower as China put out a somewhat of a bearish industrial production number. So it continues to point to the idea that Chinese economy is slowing. It needs stimulus, and I'm not sure they know how to do that. This week also is Federal Reserve Week, Fed Week. They'll either raise interest rates or leave them alone. If they raise them, that's the U.S. dollar can swell higher, and that would be a little bearish on future cotton or agricultural exports in general. Over in the grains today, however, we did see a decent rally. Corn, beans, and wheat all higher. I think once these crop numbers were out of the way, the market was a little freer. Those markets were a little freer to come up. We actually came out a little bit less than what was anticipated for corn. It came out at 13.6 billion bushels. That is a little below last month August number, and certainly that stimulated corn to rally. Corn may challenge the $4 area, it seems to us. September corn went off today around 379, and then beans came out slightly above August number, but below what people were looking for, 13.91 billion bushels. So the notion is that as we go through the rest of this between now and October, on the October report, we should see maybe less acres come forward. There's more of a dispute between the USDA and FSA over the corn acres. The yield per acre came off for slightly for beans, more measuredly for corn, and that has given a little firm undertone to the market. However, we still have harvest to go, and the seasonal tug is for prices to come down. So it'll be very interesting to see how that indeed falls out this year. So let's see what tomorrow brings. If you have any questions or comments, of course, give us a call, 1-800-910-1910. Thanks for listening.